Hey guys, Kill Stokes here. Welcome back to another weekend trading edge video. It is good to be back. As you can tell by the voice, I have not fully shaken off this thing I've had. I've been down for about a week, which is rare for me to be sick. Usually I'm a couple days and I'm good, but I want to try my best to get back into a normal routine as much as I can. And that starts with giving you guys a weekend video with sound this time. So we're going to keep it short and sweet, meaning focus on one thing this week. And we're going to focus on the NASDAQ. I want to get started on the 4-hour chart. Now, if you're new to the channel, I typically do something called top-down analysis, where I look at the higher time frames first to gain perspective, and then I go down to the lower time frames to kind of look for a more detailed view and decide how I want to get involved. It's part of our bigger IPDE process as well: identify, predict, decide, execute. Today, we're going to do the opposite, just for, not for necessarily educational values and kind of as a tutorial, but just because I think it's going to be more entertaining if we look at the small picture first and then kind of reverse engineer everything with a few of the ideas that we had. So you'll see here on the NASDAQ on the 4-hour, we ended the week with a very familiar candlestick combination, right? A few weeks ago in the video, we looked at this on the pound yen. It was a 3-bar reversal that ended up playing out very nice, or pound New Zealand, I think it was actually. And we're setting up the same thing here, something similar. We have our high momentum bullish candle right here. We have our rejection bearish candle, right, to end the week. And if we were to get a lower low, lower close, meaning, right, go back here, if we get a candlestick that both breaks and closes below this current candle, that would complete our 3-bar reversal pattern. That would be a bearish bar. I know it's green, but I'll let me color it in, because there's going to be one person on YouTube that's like, well, okay, it's a bullish candle, right? If we get our bearish candle here that gives us a lower low, lower close, that is a very good sign for a potential reversal. So if you are a counter trend trader, that's something you can take a look at. Of course, these bars or these candlestick combinations in their own right, so just alone, don't really mean too much, in my opinion at least. They get a lot more powerful when you give them perspective. And if you look left, structure leaves clues. My mentor Jason Stapleton taught me that, and Todd Brown as well. Great kind of trading saying that stuck with me and kind of keeps me on the right track. Look left, structure leaves clues. You can see we are right at a key level of previous structure resistance as well, building a pretty good CTS score. Now, believe it or not, right, although this is a decent counter trend trading opportunity, this isn't the opportunity that interests me the most, right? For structure-based counter trend traders, there's nothing wrong with taking this. But the bit of concern that I have with this from my perspective is room for opportunity, right? So this is a counter trend trading opportunity, which means that in order to make profit, we need the market to go lower. So the question I want to ask myself is, if the price is likely to go lower, then where are we likely to go lower to? And we don't really have a lot of room to the next level, or area, I should say, that I'm interested in, right? If we zoom out and look left again, I'll show you. We take a look at these little rejection candles right here, right? So we had this kind of resistance rejection. We came down, we bounced, and created this nice little level right here. We can see we retested this level as we came back over here as well. And even as previous structure resistance was broken, it became support up here. This is really the next level that I would anticipate price coming to after a bearish move. I don't see anything on the chart. Excuse me one second. Come on, voice, we're gonna make it through this. I don't see anything on the chart that says we're likely to continue all the way back down. So my expectation is that we come somewhere, we retrace somewhere in this level before putting in our next move. Now, this is the interesting thing about this situation, right? From a technical perspective, we have nothing that says we're likely to continue bullish, right? In order for me to have that bullish prediction from a technical perspective, we would need to violate this structure high. But if you're someone that's trading the NASDAQ, or especially investing in the NASDAQ, you typically have a bullish bias. With most indexes, right? You're looking at more of kind of like a buy and hold, dollar cost averaging type of thing, where the general direction of the trend is always bullish, and you're looking to, maybe play counter trend opportunities every once in a while, but generally involve yourself with the overwhelming trend or the underlying trend. And I want to keep zooming out a little bit. I want to zoom out to the daily and take a look at what has happened here on a daily. And you can see that on daily, we have been, the first thing that comes out to you is that we've been in a bearish move. And you can see that the last bit of this bearish move, right after putting in new structure low, retracement, new structure low, is that we've held this previous level of structure. If we go one more time frame out to the weekly, you're going to see something else, right? Not only have we held this level of structure, but our most recent move down right here gave us a fair amount of bullish divergence as well. And divergence is when your indicator or oscillator and your price chart, your price action are doing two different things. So you can see here on price, we have made lower lows, right? First low right here, second low right here. Second low is lower than our first low. However, here on my indicator, and this is the relative strength index, the RSI, you can see that we have bullish divergence, meaning that my first low is right here. However, my second low is higher, right? And when you combine that with us basing off, this is a sign that is typically used for traders to look at the market as running, look at the market to be running out of steam, and we may see a potential correction or a potential reversal. We bump one more time frame out to the monthly, and we'll get a bigger perspective of this dip and where this dip has actually come to. And if we take a Fibonacci retracement from our last retracement right here, spike in good old 2020, right? We all remember this. We have come back down to a 618 Fibonacci retracement. You can look left, structure leaves clues as well. And some of you guys are pointing this out. Great eye if you are, right? You can see more divergence up here, but not to get too distracted. You can see that we've retraced to a 618 Fibonacci retracement, which is the golden mean. And typically when you're looking at strength of trend, a very strong trend will retrace at the 382. A kind of normal natural retracement in a trend is the 618. So we are currently trading at a place where, quote unquote, a natural retracement, a natural area of, or period of relief should come to. So you add that 618 retracement, that structure on the monthly, you take it down to the daily, look at the divergence and the basing off, the refusal to create new structure lows on the last move. There's a chance that, hey, we may see a continued move higher. If you're someone that takes fundamental analysis into account as well, you certainly want to put that fundamental perspective into your score sheet too. Now, going from lower time frame, zooming all the way up to upper time frame and going back down, this is why it's important. If we can violate, we'll go to 4 hour here, if we can violate this key level of structure here on the 4 hour, our highs here, the next level of structure that we can go to is going to be right here. So it offers a pretty decent opportunity even for a short-term trader and not an investor. But if you're someone that has that bigger bias from the higher time frame, instead of waiting for this level to be violated in order to hopefully catch some type of retracement and a move up to this level, you can actually position yourself prior to the break. So what you're doing is you're anticipating the breakout of this level. You're looking for this pullback into this zone. You're trying to position yourself in this pullback so that you can have an even cheaper price point to position yourself for a move up to our next level of structure. And probably, again, if you're a longer term investor, an even higher move to come in the future. So that's all I got for you today. The voice is just holding on enough to finish. I want to try to save it so we can run the Q&A Monday, but I hope you guys enjoyed. Do me a favor, hit that like button if you thought this was valuable. And of course, if you did find value in this content, if you like my form of analysis, there's tons, hundreds, literally hundreds of videos here on YouTube that you can watch. And of course, if you want even more about trading and kind of my journey, and you can check out the Trading Coach podcast available on your favorite app. New episodes uploaded 3 times a week. All right. Hope you guys enjoy your weekend. And until next time, plan your trade. Wait, I just said the same thing twice. Yep. You can tell I'm still not fully focused. I'm just going to leave. All right. See you.